Welcome to Breaking News to Trading Moves. Today our focus is on Teva Pharmaceutical Industries and the big corporate story they're getting ready to share. They are set to present their Pivot to Growth strategy. It's happening at the 44th Annual J.P. Healthcare Conference on January 13th, 2026.
Yeah, and that JPM week is always a major catalyst. It's really where management teams set the tone for the entire year.
So our mission today is pretty straightforward. We need to understand the strategy they're putting forward and, just as important, figure out which of their peers might benefit or maybe feel some pressure from what Teva has to say.
Exactly. I mean, for Teva, the goal here is to get a market re-rating. They want investors to see them as more than just a leveraged generics company.
They want the focus on their specialty brands.
Right, the higher margin brands and the pipeline. It's all about showing strong free cash flow and a real commitment to paying down their debt.
Okay, let's zero in on that debt part for a second because that feels like the foundation for everything else, doesn't it?
It is. I mean, Teva's been dealing with a lot of debt for years. So the basic idea here is to use the steady cash that comes from their generics business to fund the innovation side.
It's a classic playbook, but one they've had trouble with in the past.
For sure. And the biggest financial goal they're aiming for, the one you need to really watch, is achieving an investment-grade credit profile.
Explain that for our listeners. Why is that single thing so important?
Well, it's not just about getting cheaper debt, though that's part of it. It's really a signal of financial stability. It tells the market that you're managing your capital responsibly.
And what does that stability let them do that they can't do now?
It gives them flexibility. When you're junk rated, your hands are basically tied. Every dollar has to go to servicing debt. But once you hit investment grade, suddenly you have options.
Like what?
Things like licensing deals, maybe bigger partnerships, even some smart targeted acquisitions. It opens up a whole world of external growth that's closed to them right now.
That makes the whole story much more credible. So with that in mind, what are the specific products they're going to be highlighting to prove the growth part of this strategy?
They have three key brands they'll be talking about. First is AUSTEDO, which is for movement disorders like tardive dyskinesia. It's a high-value product that's already doing well.
Okay.
Second is AJOVY for migraine prevention. This is in that very competitive CGRP class, so any gain there is a big win. And third is UZEDY, which is a long-acting injectable for psychiatry.
And what about the pipeline? I mean, those brands are driving revenue now, but the future story depends on what's coming next.
Absolutely. The pipeline is pretty broad. In the nervous system space, you should expect an update on their olanzapine long-acting injectable, or LAI. Then there's DARI, which is for respiratory.
Okay.
But the one that's getting a lot of buzz is their immunology work, specifically duvakitug, their anti-TL1A asset.
That's a hot target right now.
A very hot target. It's seen as a potential successor to the big anti-TNF drugs. If they succeed there, they could challenge some billion-dollar products in the inflammatory bowel disease market. They'll also touch on a couple of earlier assets, emrusolmin and an anti-IL-15.
All right, so that's the clinical side. But you said the financial piece has to be very clear. What else, beyond that investment-grade goal, do they need to spell out?
They need to give a really transparent financial roadmap. That means confirming how 2025 finished up and then giving a specific outlook for 2026 and beyond. They have to be granular about capital allocation and give firm timelines on reducing that debt.
Without that, it's just talk.
Exactly. Without the details, the story is just aspirational. It's not something you can invest in.
Okay, so if Takeda pulls this off, if they communicate the strategy well, it's going to affect other companies. Let's start with the potential winners. Who stands to benefit from a confident Teva?
Right, so we see three groups of companies that could get a lift from this.
What's the first one?
The first category is what you could call the turnaround and deleveraging stories. This obviously includes Teva itself, ticker TEVA, and its main peer, Viatris, that's VTRS.
And what's the logic there?
It's sort of a rising tide situation for this specific business model. When a big company like Teva shows it can manage costs, improve margins, and pay down debt, investors get more confident in similar stories. So Teva's success helps validate the model for Viatris.
Got it. So good news for Teva could mean investors take a fresh look at Viatris. What about the R&D side, that immunology asset you mentioned?
That's the second category, immunology and IBD pipeline momentum. Again, Teva TEVA is a winner here, but the other name to watch is Roivant Sciences, ticker ROIV.
How so?
When a major player like Teva talks up its anti-TL1A asset and the potential in that market, It creates a kind of halo effect.
Yeah.
It reinforces the whole investment case for that specific drug target, which is something Roivant is also heavily focused on.
Okay, that makes sense. And the third group of winners.
The third is built around their neurology franchise strength. This is Teva, TEVA, and also Neurocrine Biosciences, which is ticker NBIX.
Because of AUSTEDO.
Exactly. Teva is positioning AUSTEDO as a core engine for growth. Any positive news there, like new demand signals, keeps investor attention on the whole high-value neurology space, and that helps a company like Neurocrine.
All right, now we have to look at the other side of the coin. A stronger Teva has to create some competitive pressure somewhere. Who are the companies that might be feeling some heat from this?
Yeah, you can break down the potential losers by therapeutic area. The first is a big one.
Which is?
Category 1 is the migraine prevention space, that CGRP battlefield. Here you're looking at Eli Lilly, ticker LLY, and Amgen, AMGN.
And the risk for them is?
If Teva comes out and reports that AJOVY is gaining real momentum, more prescriptions, more market share, big wins with insurance plans, it just confirms how tough that market is. It could mean more pricing pressure and maybe tempered expectations for the incumbents.
So if Teva wins, Lilly and Amgen might have to fight harder for every patient. What about psychiatry?
That's category 2, long-acting injectable, or LAI, psychiatry competition. The names here are Johnson & Johnson, ticker JNJ, and Alkermes. That's ALKS.
And this is about Teva's UZEDY.
Right. Any good news on UZEDY, strong uptake, new payer contracts? That raises worries about more competition for J&J and Alkermes. The fight to get on those insurance formularies gets tougher.
And the final category brings us back to the balance sheet.
It does. Category 3 is what we're calling the higher bar for balance sheet credibility trade. The companies that could feel some pressure here are Bausch Health, ticker BHC, and Organon, OGEN.
So the idea is that if Teva cleans up its act.
Exactly. If Teva, which used to be a poster child for debt problems, really shows it can manage its finances, the market just becomes less tolerant of other highly leveraged pharma companies. It could lead to underperformance for peers whose balance sheets don't look as good in comparison.
This is a really clear roadmap for anyone watching the presentation. So before we wrap up, let's just boil it down. For listeners tuning in on the 13th, what are the specific things they need to listen for?
Okay, a quick watch list. First, listen for any change in the tone for 2026. Does their language move away from flat to slightly down and sound more optimistic about growth returning sooner?
Timing is key.
Crucial. Second, look for specific timelines on their late-stage pipeline assets, especially that anti-TL1A. Investors need to know when these things might actually launch.
And the numbers.
Third, the trajectory, free cash flow, and those leverage targets. They need to be very explicit about when they expect to hit that investment-grade rating. The speed of that process really matters for valuation.
Okay, and one last thing.
Finally, just pay close attention to what they say about brand demand for AUSTEDO, AJOVY, and UZEDY. Are they actively taking share? They need to show they're winning in the market right now.
So this presentation is really Teva trying to redefine itself. If they manage to do it, if they achieve that investment-grade rating, what's the ultimate outcome for them?
You know, achieving that goal would be transformative. It's not just about lower costs. It's about having options. It changes the company from a defender who's always worried about debt into an aggressor who can actually make strategic moves.
From playing defense to offense.
That's it, exactly. That change from financial weakness to strength is the real prize here, and it could redefine their competitive position for the next 10 years. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Thank you for listening, and we'll catch you next time for more breaking news to trading moves.